Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in 45 minutes or less. We break down the world of investing from beginning to dividends so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
I'm very good, Bryce. How are you?
Hey, you look pretty tired on the other end there.
Need a coffee. We're smashing these episodes out.
I'm well, yes. Back for another one of our Christmas episodes, deep dive on a company that has been recommended by one of our community members out there in the Equity Mates world.
Recommended being a general and loose term, not a specific recommendation.
Absolutely. Recommended that we have a look at it and expose it to the rest of the community. Blow the lid on it.
Recommended that we, two amateurs, not experts, not giving advice, have a look and general discussion about it.
Yes. So, Ren, we move into the micro caps with this one. Well, this very close to a micro cap anyway, with a market cap of 60 million.
I think it's a micro cap, yeah.
Well, so his cutoff was 50 mil, so
okay.
So I think just outside of Chris's range.
Yeah, okay.
Anyway, today's company, Ren, is Rectifier Technologies Limited. RFT is its ticker. Yeah. Currently trading at a whopping 4.5 cents.
4.5 cents. 4.4 cents.
Yeah. I was going to say 44 cents. That would
you would have been
blow
wrong.
The market cap. Yeah, so 4.5 cents market cap of $60 million. So quite small.
Yes.
Definitely not falling into the top 100 or ASX 200, that's for sure. So Rectifier Technologies, they have been around for a while. Their roots are in manufacturing power or specialising in power conversion.
Yes.
So pretty timely, I guess, now going into the electric vehicles and stuff, which we'll touch on a bit later. But
I mean, we converted power before that.
No. There's demand now.
Yeah. Electricity's done nothing for us.
It's done pretty well over the years.
But you are right. Electric vehicles are looking like a big boon for this company.
Opportunity, yeah. So they were pretty successful in the telecom market back in the 90s. I think that's where they sort of really developed their specialty, and then have gone through a number of listings and mergers and acquisitions with companies since then, primarily around the AC-DC converter model, which I know you have a bit of some history.
I do. Well, I mean, everyone sort of knows that there is AC and DC power, if not from anything else from the band.
Yes.
But I guess to understand what this company's been doing, you have to understand the actual history behind it. So here's a brief history of AC and DC power.
I'll take a seat.
Thomas Edison, when he first found electricity, he basically invented DC power. And Nikola Tesla, who was around at the same time, invented AC power. AC power can be more easily converted to different voltages. And essentially what happened then was that a war of the currents developed as Edison and Tesla went head-to-head trying to convince everyone of the merits of their respective forms of electricity, I guess. And so, a lot of the early American stuff, because it was Edison, was direct current. But the war of the currents ended when George Westinghouse, the name might sound familiar from appliances, so he partnered with Nikola Tesla and used AC power on all of his household appliances. So if we jump forward to today, a lot of our household appliances, our TV, our dishwasher, stuff like that, use AC power. And then, things like smartphones, things that use batteries are DC power. If you've ever wondered why your laptop power cord has that big box in the middle, that's converting AC power to DC power. And so when we think about electric vehicles, they're going to need to do something similar. They're going to need DC because they're battery storage. And so where these guys have a real opportunity is to convert the AC that is running into the house to DC for the electric car. And that's what they've been doing for, big telcos and data centers and stuff like that. Yeah.
Interesting.
Yes.
Well, thanks for the history in electric vehicle, the electricity, DC versus AC, the current wars.
War
I've-
of the currents?
War of the currents. I don't think
I didn't come up with that term.
heard that before. Well, so interestingly, Ren, Rectifier is, if you do want to get access to this sort of market, as we alluded to there before, it is, I guess, a market that now with the advent of electric vehicles and the growth in the demand for battery powered stuff, you know, you might want to get access to it. It's the only electric vehicle equipment supplier and distributor on the ASX at the moment.
Yeah, I always find that claim a little bit like whatever. Like maybe 40 years ago, if you could only invest in the ASX and you wanted to get exposure to these themes, it was a meaningful claim to say we're the only one doing X or Y on the ASX. But these days I'm like, great.
I'm going to the States.
If I think Tesla's Powerwall's better technology than you, I'll go there. If I think, you know, the Germans are doing something interesting, I can just as easily go there. The fact that you're Australian, like, great, support Australia, but be
Support
a good
local
business.
businesses. Ruthless over here.
Yeah.
Now, that's a fair call. I guess the barrier to entry to investing in overseas markets is a lot lower now. So to your point, making these sorts of claims, I guess, is no longer probably as big of a draw card or marketing opportunity that it used to be.
Yeah. But I mean, you know, well done being the only one. That's good.
So from my point of view, Ren, something that stood out is they announced it in November, and it's one of their latest research and development projects, which has significant implications on the electronic vehicles industry, and that is a high-efficiency bidirectional power conversion platform.
Yes. Now, do you want to explain
confusing,
that?
But essentially what it means is that they've developed a platform that not only means the electric vehicle can charge and have the electricity converted, but also it means that they can then put power back into the grid as well. So pretty, I guess, important and a good step towards a more sustainable environment.
Yeah, and potentially a good way for electric vehicle owners to profit off spikes in electricity demand.
True.
Depending on how smart the platform is, but I imagine it is, if you can set parameters where if the electric vehicle is fully charged and electricity prices go to X, start feeding it back into the grid and selling it into the grid.
And catch the bus the next morning.
Well, no, then you charge it when it's cheap.
Yeah.
So, for example, electricity prices generally spike and electricity demand generally spikes on really hot days between like 4 p.m. and 8 p.m. because that's when people get home, turn on the air conditioner, turn on all their appliances. That's when we generally see like brownouts where the grid has to just shut down for like 20 minutes at a time in different parts of a city. If you got home, plugged your electric vehicle in, and then it could be basically used as battery storage for the grid. And you could then feed it back in when prices were high in that time of peak demand. And then you could charge it overnight when prices are lower because everyone's asleep and have turned their air conditioning and stuff off. Potentially, that's a really useful thing for people to get access to. I was trying to see if like the Tesla Powerwall could do something similar. I couldn't see it on any of its product specs. That's not to say it can't. I just had a cursory glance at a few of their information sheets. But if it is something that this company can offer that Tesla can't, like that's a big tick for them.
Yeah.
Yeah.
Equity line.
My question though is, and I don't have the answer to this, but how much electricity would you really actually be selling back into the grid? Is it actually a meaningful amount?
Well, I mean, it's meaningful is a relative term. Like you can't, you're not going to quit your day job because of it. But if you can save some money on your power bills, like great.
We maybe talking a couple $100 or something. I wouldn't know. Like,
yeah, well, maybe if you actually looked at your electricity bills.
we're gas, mate.
It's a good question. I couldn't tell you.
Yeah, like I wonder how many watts or kilowatts an electric vehicle actually holds. Like, what's the full charge? I wonder. Probably should have looked that up before.
I was going to say.
But anyway.
Yes.
So let's move to the financials, Ren. And as we said at the start of the show, this is bordering on a small micro cap stock. So potentially potentially a lot of upside pending the success of these new developments that they are pushing out. And to your point, Ren, if it is something that differentiates them from Tesla, and I guess Tesla vehicle owners go out and buy, then, good opportunity for them. But yeah, $60 million market cap. It falls within the industrials sector. Pending where you look, it's got a PE of 28 to 29 and the sector price to earnings 26. The reason I say pending where you look is because off air, Ren and I have been comparing notes, and we've realized that depending on which source you look at and depending where they pull their data from, some of this information can't always be aligned, which to us is very confusing.
This shouldn't be the case. But Yahoo Finance sort your shit out. Your numbers are wrong, or the annual report's lying. So we're going to say your numbers are wrong.
It's totally weird, and we'll probably get into that in a second where we compare revenue. But weird.
Yes.
Yeah. Doesn't help our case trying to make investing easy.
No.
Over the years, Ren, they've managed to grow earnings per share at 48% a year, is what I've come across. So pretty impressive earnings per share growth. Interesting to see how that plugs into your DCF, if that is what you've chosen to do from a valuation point.
On that earnings per share, though, how much of that just came in the last year?
Couldn't tell you.
Yeah, okay. The reason I ask is because you flagged at the start around the opportunity for electric vehicles. And so what we can see is their revenue this year was up 141% from 7.8 million to 18.9 million.
Huge.
And the company has explained that was mainly driven by electric vehicles, which contributed 12.3 million to its revenue number. So if you look at its earnings numbers, and the caveat on this is we're now very skittish about what numbers are correct and which ones aren't. But
we're going with annual report figures.
I'm not, but the net income, so the earnings after tax and everything, net profit went from 60,000 to 2.13 million.
Yeah, significant increase.
Yeah. And that's sort of been this push into electric vehicles. So that's a massive increase just on the last year alone. And I think that will skew the average high. The other thing is if you look between F17 and F18, its net profit dropped. And if you look between F16 and F17, its net profit also dropped there. So it hasn't been a, bottom left to top right incremental growth every year story.
Yeah.
But I guess that makes sense when it's looking at a new market and pushing out new products and stuff like that, which does, if we get into valuation, which does create a bit of a question around, will the trajectory, do you average it out if the trajectory's been a little bit up and down? So, but with that in mind, if we have a crack, so the current price is 4.4 cents and its earnings per share are 0.16 of a cent. Is that what you've got?
Yeah, 0.0016.
0.0016, yes. Yeah, perfect. All right, so if we start with the discount cash flow, you've actually already done the first one, which is the relative valuation, the price to earnings compared to its sector.
Yeah.
And it was a little bit higher, sort of 29 compared to 26 for its sector.
Yeah.
29 is expensive, but if the growth opportunity is there, then it's not outrageous.
And it's all relative as well.
Yes. Yeah. So if we look at the discount cash flow and we say that the earnings are a fraction, so 0.16 of a cent, and we assume that it grows at 10% for 10 years, and then after that just grows at the rate of inflation, and we use the 10% discount rate, and that's the discount rate that both Warren Buffett and Roger Montgomery suggest to use, and we're not going to disagree with them because they've both made a lot more money than us. So if you plug those assumptions into a DCF calculator, you get a share price of 3 cents a share, which is a little bit cheaper than what the current share price is, but really it's not out of line. And I think the 10% growth, given that revenue grew at 140% last year, 10% growth might be quite conservative.
What do you have as your annual growth rate after the 10 years?
Inflation. So I said 3%.
3%.
Yeah.
Interesting. So I've plugged in inflation at 2%. Just want to run through those figures again, Ren. So you've got 10% annual growth rate for 10 years, leveling off at 2% thereafter.
3%.
Leveling off at 3% thereafter, and your risk is 10%.
Discount rate, 10%.
Discount rate, 10%. What'd you get?
0.03.
The valuations come in slightly below what it's currently trading at, Ren.
Yes.
With your 10% assumption over 10 years, have you actually based that on anything, or are you just going, just to help explain how you came up with that 10%?
No, I haven't based it on anything.
Okay.
Yeah, I mean, it's basically a bit above market. But if we were to plug in, last year's growth rate, its revenue growth rate was 141%, the number we get would be a little bit absurd. If we flip it around, though, if we go to the reverse DCF, which essentially asks, given the assumptions that you've put in and given the current share price, what's the growth rate that is required to justify that share price? And what we get is 14.14%. So realistically, not an outrageous growth rate if you assume that this new push into electric vehicles is going to bear fruit.
Valid point. So if I then bring in the quantitative analysis that Morningstar have done, and as I said, it takes into consideration a number of the factors you've been talking about, Ren, cash flow and revenue, as well as economic moat, financial health, those sorts of things, they're coming in with a fair value of 5 cents. So, pretty close to its trading price at the moment. So we're not far off.
No. And then the last one is if we do the Roger Montgomery style where you take its book value and its return on equity and you use that as the basis of a valuation, its book value per share is 1 cent. Its return on equity, and given it's been quite variable, I've just taken the average of the last 5 half years. That is 18.04%, and it's not paying a dividend. So if you go to Roger Montgomery's table, you say the book value times by the multiplier that return on equity number tells you to use, you get a share price of 2.7 cents per share. So again, a little bit lower than the current share price. I guess the market is expecting a higher return on equity as this new technology push emerges.
Fair enough. Nice. So to close out, Ren, any fun fact?
Well, I mean, I've given you this whole history of the War of the Currents.
That's fun enough.
Yeah.
To close out then, where do you think this falls in your circle of confidence?
I mean, I'm not an electrical engineer by any stretch, so it's probably a little bit outside. I think that the energy market more generally, I work a little bit in my day job and I'm starting to understand it a little bit more, but yeah, probably just outside.
I would agree. I think certainly probably more outside than yours. You've got a bit more exposure to this sort of stuff in terms of the technicalities around how it all works from DC, AC, all that sort of stuff. Definitely not in my wheelhouse, but I can understand the macro trends that it's trying to get involved in.
I think the thing is, though, it can very much become in your circle of competence if the technology is proven to be successful and it's less about making a bet on how this technology compares to other new battery/power converters. It becomes more a consumer product that is really just exposed to the basic forces of supply and demand based on electric vehicle utilization and the other competitors in its industry and how they compete on price and brand and stuff like that. Like if the conversation shifts from technology to consumer products, then it probably is right in our wheelhouse. And the analogy for that is probably how Buffett made the call around Apple. Apple became less cutting-edge technology company that you had to understand the technology side of things, and it became more and more consumer products, and now it's Buffett's biggest holding.
Yeah. So I guess the point is don't be worried and exclude it if it's not in your wheelhouse at the moment. Just keep an eye on it and see how you go. Nice.
Or study electrical engineering.
It's also true.
Yeah.
All right, Ren, we'll leave it there. Looking forward to diving into our next stock next week.
Sounds good.
Thanks for listening to Equity Mates Investing Podcast, a production of Equity Mates Media. Please remember that everything you hear in Equity Mates Investing Podcast is general advice only. The content has been prepared without knowing your personal objectives, specific financial circumstances, or goals. The host of Equity Mates Investing Podcast may maintain positions in the companies discussed. Before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.